Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, it's Friday. We made it to the end of the week. What do we got going on in the markets today? Well, the Nasdaq's down about 120. Dow's up a little bit. Dow's up about 30 or 40 points. But the Nasdaq's taking a little bit of a hit today. So yesterday we had that big update on the CPI number, right? Stock market went off to the races, but it gave it all back. Okay, on the S&P, now the S&P, it went up back to the 20-day, retested it, and it failed. Anyway, so it came back down. Now we've come down and we're sitting right above the 50-day. Now I do think they're going to get a bounce off this 50-day and probably run it back up and retest that 20-day again. But even if we get through the 20-day, I think the rally will fail. It's not going to be successful. This market's coming in. It's going to pull back. It's going to come down to the 200-day moving average, but nothing goes straight down. It's going to get a little bounce here, probably go up, retest that 20-day. Even if it gets through there, there's gaps to fill above. But we've seen the high. We're going to come up, have a lower high, and then make a lower low as we come back down. Once again, this is just my opinion, just my take on the market. Your take may be completely different. All right, so let's get over to the real estate market. Now, why do I think that the real estate market is going to have this great reset, a reset of the prices, as you will? All right, so I think the prices are going to come down by 40 or 50% from here. Now, why do I think that? Now, as a real estate broker, I know that rising interest rates on mortgages, on car loans, on credit cards, on student loans, this all affects the purchasing power, right? It affects the purchasing power. And I know how inflation at the gas station, inflation at the grocery store, inflation's everywhere. We just got the inflation numbers again, right? Okay, so inflation is starting to tick up. Today we had the PPI, which is the producer price index, right? And that's ticked up. And that tells you going forward, we're going to see higher inflation. Inflation's not done yet. It's not gone away. It's going to have a resurgence. And what this does, it affects the purchasing power of the consumer. Okay, so now I know that, basically the ballooning consumer debt. Consumer debt is just exploding. So this ballooning debt, it affects the debt to income ratio of the borrower. Now, I know all this being a real estate broker, but it's nothing. This is just common sense, right? Anybody should be able to look at this and see the common sense of all this. The purchasing power of the consumer is being affected. Now, Fannie Mae, they just came out and they said that the debt to income ratio has surged up to 40%. 40% when people buy houses, the debt to income ratio is running at 40%. Now, this is higher than it was back in the 2008 crash, right? So we are at a record high. We're higher up. Now, in my area, the debt to income ratios run about 60%. 60% for most people in my area when they go out and they buy a home. That's just because they're stretching to get into the home. Now, if they have a debt to income ratio of 60%, let's say they're a young family, let's say they have a couple of kids, well, their child care bill is going to run 20% of their income, right? 20%. That's incredible. How did child care ever get up that high? Well, I'll tell you, the government sent out stimulus checks for child care. So what did the child care places do? Well, they raised their prices. Anytime you get the government involved in the pricing situation, the price goes up. You notice that with student loans. Now, college education used to be relatively affordable, but then they came out with student loans. What did the educators do? Well, all the colleges raise their tuition up. Get the government involved, you're going to see that price going up. The government thinks they're helping people, but they're really hurting people. That's my take there. Anyways, that's what happened to, child care industry. The rates have gone up. 20% of your income going to child care if you're a young family with kids, right? And 60% of your income going to the mortgage. This is unsustainable. It's not sustainable. The affordability factor has gone away, and this will basically this is not going to be able to continue to go on. So what happens? Well, there's going to be a reset. Now, the consumer, the buyer of the houses, as you will, they cannot buy the houses even if they want to. Now, I agree there's demand out there for homes, but they cannot afford to pay the price. So what has to give? The price has to give, right? And that's where the reset's going to come. The reset's going to reset down about 40 or 50% from here is my take. And that's playing out now. This year's been flat to a little bit lower. Throw in the inflation rate where houses have actually started to come down. The reset is already taking place. Now, the average consumer, the average person, actually the average person in the United States, 54% of them don't have $400. They don't have $400. How do you think houses are going to stay up here when 54% of Americans don't have $400 for that emergency? And we talked about this. House emergencies, a lot more than $400. New roof, a lot more than $400. Water heater goes out, a lot more than $400. Your heater goes out, air conditioner goes out, a lot more than $400. People don't have $400. How are they going to be able to afford the homes at these high prices? Well, my point is they're not. Now, just interest on credit cards in 1 year has gone from an average of 14% to over 21%. 14% to over 21%. So the interest rates went up. What about on car loans? Car loans have gone from 4% to 8%. They've doubled the interest rate on car loans, right? Now, if you're going in the used car market, it's actually at 12%. 12% in the used car market, 8% in the new car market. And right now, the repossessions on cars running about $15,000 to $20,000 a day. Now, is this a good economy? It's a great economy. Look at the stock market. Oh, don't look at it. It's coming back down. Anyways, it did hit a high though, right? We've hit the high and we're coming back off that high. But anyways, a lot of things are changing right now. Just the mortgage rates. Just, a year and a half ago, they were sitting at 2.8. I got 2.8. I got you beat. I got 2.7. We're still getting this rate envy thing going, right? But now that's over because we're up at 7.4. 7.4%. That just might as well say 7.5. Look, we're going to go over 8%. We may go over 9%. I actually think next year we're going to see double digits in the mortgage rates. A lot of people disagree with me. They say, but Mike, inflation's coming down. Mortgage rates are coming down. The Fed's going to pivot. We're going to get those 3% mortgage rates back. And that's when I'm going to put my house on the market so I can go find another house at the 3% rate. Look, those 3% rates are not coming back. They were held, the Fed held interest rates at 0% for 14 years. And right now we're going to see the ramifications of that. We're seeing it with inflation. We're seeing it, okay, now right now they're raising them really fast, right? I mean, went from 0% to 5.5%. I really don't think they're done raising rates. Now, I know in the comments, everybody go, oh, Mike, they're done. I don't see it that way. I see inflation coming back. We peaked out at 9.3%, right? And we come down, I guess we're down around 4% now, but I think we're headed back up. That's just my take. Look at the price of oil going back up. I think oil's going over 100. People say that's impossible. Oil's not going over 100. We sold all our oil reserves. We sold them at 60. We can't buy it back at 100. Well, that's what the government does. They make bad decisions. Bad decisions for me, bad decisions for you. They sold off our oil reserve. Why'd they do that? Well, they wanted to get inflation down. Now, it might have worked temporarily, but when we got to buy that oil back over 100, do we look very smart? No, we look like idiots, and the rest of the world is laughing at us. That's all I want to say on that. But look, things are changing out there for the consumer. The consumer cannot afford these prices, right? So credit cards, 21%. Some of them as high as 25%. Now, who in the world is borrowing money at 25%. Well, it's people who need money. People who need money will pay anything to get that money. Now, look at the payday loans. Payday loans are skyrocketing. The rent-to-own programs are up, right? The buy now, pay later sort of thing. Now, if you got time here, let me tell you a quick story. I used to be in the video rental business. I had a chain of video stores. That was the first way I made a lot of money. I became very wealthy in the chain of video stores. Before I lost everything in my life, I've lost everything a couple of times. But I was going like that. I had 4 or 5 stores out there. And what I did back then, a video recorder, for those of you kids out there who don't know what one of those are, you put a tape in and watch the movie. We didn't have this streaming stuff. But anyways, these video recorders, they were selling for between $800 and $900. Well, I found this wholesale supplier for me. If I bought 20 at a time, I could buy them wholesale at $280. So I ran a little ad, and I never thought this would work in a million years. I ran an ad saying $199 down and then $70 a month. It's a rent-to-own program for a video machine. Now think about it. I paid $280. They're giving me $200. Their first payment's $70, but their payments were for 24 months. 24 months they were paying this, right? So the cost of that video recorder that they could go out and buy at retail for between $800 and $900, they were paying over $2,000 for it. But look at me as a kid. I was going, I'm investing $280 and I'm getting over $2,000 return. The rent-to-own program is great if you're the business owner. If you're the consumer, you're an idiot. But I sold out of those first 20 on the first day. People wanted more. They waited in line to get those. And then I had a customer for life, right? They'd come in and rent all the movies from Tall Mike back then. Oh, it was a great business. I love the video business. Everybody was happy. They'd come in and they were smiling because they were getting something they want. You notice when you're getting something you want, you're happy. For something you need, you're not that happy if you need it because you don't really want it, but you got to pay for it. It's kind of like tires on a car. I need new tires, but I really don't want new tires. My car looks the same with or without the tires, but you got to pay it, right? You don't really want, so you're not that happy about it. But video rental people, they were very happy, and it was a great booming business for many, many years. That's where I made my first fortune. Lost it all a little bit later, but that's another story for another day. All right, so let's move on here. But my point is interest rates, right? Interest rates on credit cards, 25%, but people are doing it because credit cards are at a record high. They're at a record high. We're over $1 trillion. People are borrowing money at 20 to 25% right now. That's ludicrous. That's crazy. Why are they doing it? They're doing it because they don't have any other way to get money. And the banks are going to become predators again. What they see is you got equity. Right now there's equity envy out there. I got equity in my home, but I'm locked in at 2.8%, so I can't touch the equity. Well, here's what the bank sees. The bank sees, oh, we're not doing so well. Let's get some of this equity. Let's go after their houses. Let's make these HELOC loans so we can foreclose on them. You go out and get a HELOC loan for $20,000, $30,000, $40,000, and you burn through that cash really quick because you got one emergency and you're borrowing that money at 8, 9, 10% interest rate. All of a sudden you can't afford your payments. Well, guess what? That bank is coming for your equity. They're going to take the house from you. They're going to get your equity. Banks are pushing HELOCs right now, not because they're your friends, not because they want to do you a favor. No, they want to get your equity. They want to get your house, and they will get your house if you're not careful. Okay, so that's what the banks are doing, pushing the HELOCs. Couple other things. All right, so Lowe's got downgraded. Home Depot, they got downgraded. Why? Why? Because people don't have money to spend. Look, you're locked into your forever home, but you don't have money to go and spend to remodel the bathroom, to remodel the kitchen. Home Depot downgrade because people aren't going in and spending money. Why? Because they have no money unless they go out and borrow the money. And where they got to borrow the money at, they got to borrow it on their credit cards. A year ago, credit cards, 14% average interest. Now it's over 21, and a lot of credit cards are 25%. But people see the recession coming. The recession's just around the corner. So people are trying to hunker down. They're trying to not pay on their credit cards. So who's getting hurt? Well, Home Depot's getting hurt. Lowe's nose is getting hurt. All right, so this economy is not doing well. It's hurting big time. This economy it's an artificial economy that's been stimulated by basically desperate stimulus sent out by the government. You can't run a country on government stimulus. You got to produce things. We don't produce anything in this country anymore except for dollars. Now, we do produce a lot of dollars and we send them out around the world. This is going to come back and bite us. I guarantee you it's going to come back and bite us. The dollar is going to collapse. You don't think so? Oh, everybody thinks the milkshake theory and we're just going to send that dollar to the moon. Those moon boys, they think, so I give them some credit. They're thinkers. They got their own reasons why they think things can't go down. They only go up. Look, make your own decisions. I'm not saying I'm always right. A lot of times I get things wrong. Go out there, listen to people, make your own decisions. The moon boys, they only got one decision. They say prices only go up, never can come down, never going to go down, Mike. Those houses, they're not going to crash. My area only goes up. It only goes up, and we're going to the moon. It's Friday, everybody. Get out there. Give me the thumbs up first because it's Friday. Why not? Why not? Love Fridays. Enjoy the weekend. Hit the subscribe button so I can talk to you again next week. Bye-bye now.